Well, welcome to Darasa online again. My name is Victor Francis, your accountants teacher. We are still in the revision program, and our topic, of course, is company accounts. The first lesson, we revised on the raising of share capital and accounting entries for issued shares. We are receiving your questions. We are receiving your comments. Keep on sending questions. Keep on asking through the number that is displayed. Of course, we are going to answer them accordingly. For today, we are going to have another lesson, which of course will cover the part of forfeiture and reissue of share capital, as well as debentures. As I said in the previous lesson, that our revision program will cover mainly 5 areas. That is the part of raising of share capital, which was covered in the previous lesson, as well as accounting entries for the issued share capital. Of course, it is also covered in the previous lesson. Today, so we are going to have a lesson on accounting entries for forfeiture and the issue of shares. And then in future, in the coming lessons, we'll have lessons on redemption of preference shares and the redemption of debentures. So for today, we are going to concentrate mainly on accounting entries for forfeiture and the reissue of shares. The way we forfeit and reissue shares is the same as for debentures. What is forfeiture of share? Forfeiture of share means termination of membership and taking away the shares from the shareholders who fail to pay the shares. So whenever the shareholder or a debenture holder fails to pay, may fail to pay either the allotment money after being allotted with certain shares or the subsequent calls. And when the procedures of repaying this fails, automatically the directors may decide to forfeit these shares. So if the shareholders fail to pay the calls made on them, the director may choose to cancel their names from the register of membership of members and treat this amount already paid by them as forfeited. And this is for non-payment of money due on the calls. So the shareholders whose shares have been forfeited, automatically they cease to be the member of the company, and their share, and the shares forfeited can be reissued to by the company to another subscribers. Of course, so when the membership is terminated, so all the shareholders to whom the shares are forfeited, they cease to be members. And of course, we have some procedures to be followed when we are forfeiting these shares. When they cease to be members, that means even the money that already paid from the previous calls, so are not refunded. And these will be termed as forfeited. So they are not refunded back, and there will be a part of reserves to the company. And these shares will be reissued again to another subscribers. What are the procedures for forfeiture of shares? So as I've said, that whenever the company forfeits these shares, first of all, they stop paying dividends for the shareholders to whom their shares are forfeited. And of course, the second procedure is termination of membership. As we stop paying dividend, we terminate the membership by deregistering them from the register book. And then, of course, seizure of the money paid, that the money already paid will be seized, will be not refunded. And finally, we reduce the share capital. Of course, we are going to cancel them from the share as if they were not issued. So far, these are the procedures on how we can forfeit the shares. So we stop paying dividend, we terminate the membership of these shareholders, and their money will be forfeited, and then we reduce the share capital. So far, what are the accounting entries now? In the previous lesson, we went through the accounting procedures for issue of shares. And of course, we are going to revise them back almost. The item number 1 to 9 will be a revision, or will be the same as part of issue, because the accounting entries we cater for issue of share, forfeiture, and reissue. And the rest will be for the forfeiture. Of course, as we discussed the last lesson, when money are received from share applicants, we debit bank account, we credit application account. And when the company decides to refund some of the money for unsuccessful applicants, then we debit application account and credit bank account. For allotment by the directors, when the director allot these shares, then we are going to debit application account and credit share capital account. And then you are going to debit again allotment account and credit share capital account. If there is any premium receivable, it may be either on application or on allotment. So we debit the respective account, application or allotment account, and then it will be credited to share premium account. When the allotment money is received from allotment, then we debit bank account, we credit allotment account. For calls made by directors after the allotment, we expect the directors to make those calls whenever it is required. We debit calls account, we credit share capital account. For money received from calls, we debit bank account, we credit respective call account. So there might be payment in advance in any calls. Of course, we debit bank account and we credit calls in advance account. For calls in arrear, of course, if you remember, we debit calls in arrear account and we credit calls account. When we forfeit, share forfeited due to calls in arrear, so we consider the called up capital or called up value. What we debit to forfeit, we debit share capital to be recognized in the share capital, and we credit or we transfer to this account known as forfeited share account. Then, of course, we are going also to close the calls in arrear account. Calls in arrear on forfeited shares, we close it to be transferred to forfeited share account. We debit forfeited share account and we credit calls in arrear, because calls in arrear we are debited, then we credit them. So when these shares are issued to another share applicant, forfeited share reissued, we debit the issued share account and we credit share capital account. So for amount received on reissue, we debit bank account, and we credit forfeited share reissued account. For profit on reissued share, if any, it may happen that on reissue, we reissue them above the nominal value. So we debit forfeited share account, we credit reissued share account. So obvious, it will be the reverse for us on reissue, that we debit reissued share capital, reissued share account, and we credit forfeited share account. So for share premium on reissue, if any, of course, it will be debited to reissued share account and credited to share premium account. Then this marks the end of the accounting entries. Let us now see an illustrative question on this part of issue of share, forfeiture, and reissue, and how we can go through these accounting procedures. Let us read the question. The question reads, Tulawaka Limited issued a prospectus offering 200,000 ordinary shares of TZS 10 each on the following terms. You are given the details and the amount in TZS. On application, 1 shilling per share. On allotment including premium, 3 shillings per share. On first call, 4 shillings per share. On second call, 4 shillings per share. Then we are told that the subscriptions were received for 317,000 shares. Those were applications received. And allotment were made as follows. There is details and share allotted. Allotment in full, it were 38,000 shares, of which 2 applicants paid in full on allotment in respect of 4,000 shares each. There were 2 applicants paid in full with the allotment on the allotment stage. We are going to show them in the workings. And then allotment by pro rata, that is 2/3 of the share applied for, that were 160,000 shares. Allotment by pro rata again, quarter of the shares applied for, it was 2,000. And of course, if you add up the 38,000, 160,000, and 2,000, you get 200. So that was the pro rata divisions. Then cash amounting to 31,000 being application money received with applications for 31,000 shares upon which no allotment was made. That was cash rejected or refunded, and this was returned to applicants. The amount due on installments were received as scheduled except for 100 shares for which the holder fails to pay on second call. So all monies were received as scheduled, but only 100 shares from the share applicants who failed to honor their final call. And these shares were forfeited and reissued to Othman for 9 shillings per share. And Othman paid for the shares. So use the information provided to prepare journal entries to record the transactions, and then prepare an extract of the company's statement of financial position. That is the question. So the question requires us to prepare journal entries and to prepare an extract of financial position. And of course, I know the main problem, that's why I decided to choose this question. The main problem or challenges faces students not in answering these questions, but in preparation of journals. Ledgers, you are conversant and you are comfortable, but the main issue or challenge is on preparation of journals. So because I've shown you the accounting procedures, so we are going also to do this question. I hope it's going to help you much on your revisions. Keep on doing many questions as you can, follow the procedures. Otherwise, let us now do the working first before we go on solving this question. Because we have read the question, now let us do the workings that will help us to solve this question. So we start by application stage. On the application stage, we start with the amount received. So if you remember, we received amount from 317,000 shares of TZS 1 each. That means we received amount will be in TZS. We received cash. Then, of course, from this amount, there were amount refunded. So amount refunded, if you remember, it was for 31 shares times TZS 1 shilling each, it will be 31,000. Of course, amount to be transferred to ordinary share capital will be, because we issued only 200,000 shares times 1 on the application stage. The amount required on allotment, application will be 200 to ordinary share, 200,000. Then, of course, if you consider here the difference, that will be the excess money transferred to allotment. If you deduct here, of course, you get 86, yes. This will be excess money, and that will be 86,000. Yes, that will be the application stage. What will be the allotment stage? Okay, so in the allotment stage, we start by the amount already received from application. That is from application. We received excess amount on 86,000 shares, of which we received 86,000. Then what is required to ordinary share capital? Remember, we issued only 200 shares, but here on allotment stage, the amount required, it is 1 shilling, yes. The other was, of course, the amount required was TZS 3 shillings. So those 3 shillings, 1 is for ordinary share and 2 for share premium. So we recognize also to share premium, it will be 200 times 2. Definitely here will be 200,000, and here will be, if you multiply, it will be 400,000. Okay, that will be the amount required on allotment. But remember, we have received already 86 from application. That amount won't be received here. What will be the amount receivable now? So the amount received now will be 200, yes, times the 3 that is required on the allotment, but less 86,000. That was the amount received in, from application, but again plus, okay, let us put it clear here, plus those shares paid in advance. Let me put it clear here. Yes, amount received, yes, to be 200,000 times 3. Yes, main bracket minus 86,000 plus, okay, it will be 4,000 times 2 times the amount required here, the amount required in advance. Of course, if you remember, application were 1 shillings, allotment stage were 3 shillings, but including premium, we'll assume it is 1 plus the 2, that is premium. On first call, it is 4. On second call and the final call, it is 4, making a total of, yes, 10. Well, so if that's the case, we are in the allotment stage, and these are 2 shareholders with the 4,000 shares paid fully. They are shares on allotment stage. That means they paid the whole 80 shillings remained. So times 8. Times 8 yen. Yes. Then how much do we get here? If you multiply 200,000 times 3, we get 600,000 minus 86. We get 514,000. Yes, plus 8,000 times 8. We get 64. Okay, if you add up with 514,000, we get the amount received here. Yes, 578,000. That will be the amount received on allotment. Okay. Then we go for first call stage. Okay, so you start by recognizing the amount to transfer to ordinary share capital. It will be 200 shares times TZS 4 required on this. Of course, we get 800,000. Remember, the question tells us that all monies were received in this stage. But remember that 8,000 shares, the member holding these shares paid their money in full, so they were calls in advance. Okay, yes, of course, let me show here it also, that were calls in advance. It will be 8,000 times 8 again, yes. That will be 64. That was calls in advance at the allotment stage. But here we have calls in advance under this stage. Calls in advance under this stage will be 8,000 times the amount required in this. Of course, that will be 32,000. So this amount already received in advance from the allotment stage, yes, from this, because this will incorporate a first call and the final call. So what will be now the amount received here? So amount received will be the 800,000 required less the amount paid in advance. Okay, so if you take 800,000 less 32,000, we get 768,000. That was the first call stage. Let us go to second call. That will be number 4. That will be second and the final calls. So remember to start to recognize the amount to be transferred to ordinary share capital, of which it will be 200 shares times 4 TZS. Okay, this amount will be in TZS. It will be also the same as the first call. It will be 800,000. Of course, we have calls in advance paid on the allotment stage. That was 8,000 times 4. That will be 32,000. Okay, but at this stage again, you are told that we are calls in arrear. Okay, calls in arrear. It was 100 shares times 4. That will be 400. Then what will be now the amount received? So the amount received will be, yes, it will be, we take the whole amount required on this stage less 32,000 plus 400. So 800 less 32,000 less 400. We get 600. That will be the amount he received in the final call. Okay, so the question tells us that these shares were finally forfeited. So we go for forfeiture stage. So with forfeiture, we start by recognizing the called up capital. what is the total called-up capital? It was on 100 shares times TZS 10. We get 1,000 total called-up capital. So to calls in arrear, what was the total calls in arrear? Total calls in arrear was only in one stage of final call. That was 100 times 4. That was 400. Okay, so the difference is the amount forfeited. So the amount forfeited will be now 600. That was already being received, and that will be forfeited. So we are told that these shares were finally reissued to Othman. We go for reissue stage. So we start by recognizing to ordinary share capital. To ordinary share capital, we recognize the total nominal value. That will be 1,000, yes. Then we are told that amount received on the issue were 9 TZS, that is 900. So if we received 900, that means less than the total nominal value. Then the 100 shillings will be just like a discount on the issue. And this discount will go to reduce this amount forfeited. So this should be sent to forfeited share of to just it to forfeiture. Just write it to forfeiture, yes. To forfeiture account. To forfeiture as discount on reissue. Then it will be the 100. Of course, this will reduce the amount forfeited, and that will be transferred to reserve now will be the 500. We are going to show it in the journal. Then this is the workings that we are supposed to do. But now, after that, let us go now to open up our journal entry. Let me clear this part first. To open up our journal, remember these workings, so they are applicable in the journal. They're going to help us. This will be debt, details, will be debit column, amount in TZS, credit column, amount in TZS. This will be our journal. Entries. Okay, so remember we start by recognizing the amount received. On application, yes, we debit bank account. That will be, if we remember, the amount received, and this should be transferred to application account 317,000. Remember to write the narration. Then remember this account should be closed. So we debit application account by 3700. Okay, so by crediting ordinary share capital account with the amount required on share capital, that was 200. Okay, so the other entry was the amount transferred to allotment stage. That was the 86 amount in excess. And of course, the other account, the other amount was to amount rejected. That of course should be transferred to, yes, bank. It was 30, I think it was 31. So if you add up, I think you get there 86 plus 31. Yes, it balances. Well, that is the application stage. We go to recognize the allotment stage with the allotment account. We call for the allotment. Remember, in the allotment, the amount that was required was 3 TZS for 200 shares. If you multiply, you get 600. And of course, this should go to ordinary share capital, that was 200. The other to share premium, that was 400. Okay, that was the allotment calls. So what was the amount received on this stage? So we go to amount received. Remember, there are amount received in advance, so we are going to receive less. So amount received on this, so we'll include also the amount that were paid in advance. If you remember, let me show it here. Yes, that will be 2. So we are going to close this allotment, yes, allotment stage. Well, to allotment and to calls in advance. So that was, the calls in advance was 64, if you remember from our workings. Then, so the amount received, of course, it is supposed to be 600, if you remember. If you less the amount already received in advance, that was 86. Then the amount required on this stage was 514. That is required to 514, yes. That was required on this stage. So if you add up with the 64, that will be, yes, if you remember, in our workings, that amount received 578. Yes. That is how it's supposed to be. Okay? So you may incorporate this from here. Yes, let me show it. Of course, just to give credit, yeah, that from allotment. Allotment, it was supposed to be 600, yes. Enter the amount that is, that will be another alternative already received in advance from application. If you adjust it here, then the amount received in advance together with this, of course, it will balance. That will be another alternative way of showing this. So you may enter up here 600, then this amount you debit here, already received in advance to close this account. You enter here 86, then show the amount paid in advance, then the balance will be 578. That will be also another alternative. Okay? So that will be the allotment stage. Let us go now to first call. Of course, we know that in the first call, we enter here first call account. So in the first call account, we are not going to call the whole amount. Why? Because the amount already received in advance from, yes, what was the amount received in advance? Yes, it was from the, yes, it is here. Amount in advance, it is here. So under this stage, there is amount already received in advance. So we are not going to call the whole amount. What we do, we call only the required amount. Of course, that is required to be transferred to ordinary share capital will be the whole amount under this stage. Of course, how much? If you go to your workings, yes, it was 4 times, okay, it was 800, yes. 800. Okay, if it is 800, then amount, let me show it here clear. This is to ordinary share capital account. It will be 800. But there are calls in advance that will be not received under this stage. And that was 32,000. It was 4,000 times 2 times 4. So we get 32. That means 8,000 shares by 4. 32. Then if you less the amount, you get actually the amount required on the first call. That will be 800,000 less 32,000. So we get the amount that was paid, that was called up 768,000. Yes, that is the amount in the first call. So we are not going to call the whole amount 800 because there is amount in advance. What was the amount received now? Bank receipt. So amount received, of course, the whole amount we are received, then you are going to receive the same 768,000. That will be transferred to first call account, that is bank account, 768. So remember to write the narration on each journal you open. So we are through with the first call. We go to final call. Let us clear this part again. Okay, so this is debit, TZS, credit, TZS. This is our journal. This is date column, and this is details. Okay, so we are through with the first call. We go to second and final call. So we are not also going to call the whole amount. In fact, we do the same to ordinary share. Capital, if you remember, it will be the same amount. There were yes calls in advance to calls in advance. Calls in advance, there were 32, if you remember, and this is stage. So it will be the same as called up 7, just like in the first call, 6, yes, 8. That will be to ordinary share capital account. That will be the called up share capital on the final stage. Then what was the amount now received? So remember, we received less. There were calls in arrear. Then to second and the final call. So to second and final call, we take the 768. That was called up. So calls in arrear were 400. If you less here, how much will it be now received? 768,000 less 400. Yes, you get 76. Yes, 76, 600. That was the amount received. Yes, and the final call. Okay, so we are told that these shares were forfeited. Of course, what do we do? In the forfeiture, we debit for forfeiture account with the called up capital. We credit ordinary share capital is 1,000. Of course, then from there, no. Abbreviate this. We debit ordinary share capital to cancel out the share capital. We credit for feature account. Of course, we need to close the calls in arrear. What was the calls in arrear? Yes, it is here. It is debited. We credit calls in arrear. We debit for feature. We debit for feature account by 400 to, yes, calls in arrears. That is 400. Okay, so up to there, you'll have cancelled the share capital, and of course cancelled the calls in arrear. But these shares, we are told that were reissued. We got to recognize the reissue of share. So we debit the issued share count, that is 1,000, and we credit ordinary share capital to recognize the share capital, right? The narration. So the amount received, we debit bank, that was 900, and we credit, of course, credit the issued share account, that was 1,000. Then that amount should be transferred to forfeiture account, and of course this will be just like a discount on reissue. That will be 100. Of course, that will be the transaction for reissue. Okay? Remember that this amount is going to reduce the amount forfeited. What was the amount forfeited? If you remember, the amount forfeited was 600. So this should be transferred to reserve. How do we transfer this to reserve? Then we debit forfeited shares, and these will be transferred. Forfeited, yes, forfeited shares. We transfer it to share premium. But we are not going to transfer the whole amount, that is 600, because this 100 will go to reduce the amount forfeited. So we transfer the balance, that was 500. So it will be transferred to share premium. Yes. And of course, you will have shown your journal entries as required under this question. So remember all the alternatives that I've given you, including these ones, that you may transfer this amount from application to this allotment stage here to show the 600, and then you adjust. Of course, it will be the same as I've shown you. And you may give in different way, but this is the approach you can do to answer this question as required with the journal entries. So the question also required us to prepare an extract of financial position. Okay, so because of time, let me highlight. Because in order to prepare the statement of financial position, you need first of all to prepare ledger accounts. But in fact, with these entries, we have only few entries. Of course, if you can prepare, we call it extract of statement of financial, yes, position is at, okay, you show the date, and the amount should be in TZS. Okay, so we go to current assets. With current assets, we know we have only bank balance. So if you add up, of course, you are going to get 2,400,000, well, 400,500. Yes. So that will be the balance. To equity, if you go to the part of equity, in fact, you are going to have share capital. If you remember, we issued only 200 of 100, of 10 each. It will be 2 million. Yes. So the balance will be the share premium. If you remember, the share premium was 400,000 plus the 500 forfeited. So we get 400 and 500. Then total 2,400,500. That 2,400,000 and 500. So this is how you are supposed to do. And of course, this marks the end of this lesson today. Solve the question that is displayed on your screen. The number that is displayed, use that number to ask questions, to send comments, and in any case, contact us. We are here to help you. Thank you for listening. See you the next lesson.